If you've learned smart money structure, but you're still losing, you're reading it wrong, and it's not your fault. Most traders get trapped by what looks like structure, but isn't. Let me show you the simple shift that finally made structure click and turned confusion into consistent trade. Watch this, and if it hits, I'll show you how to take it further right after. If you're starting to understand structure, but still feel stuck when it comes to placing real trades, this is where it all clicks. You'll finally fix the missing half of your strategy, the part that turns smart money structure into trades you can actually take with confidence. No more second guessing, no more late entries. Once you see this, your charts will never look the same again. Click the link in the description to get started. So most of you are going to look at your markets and potentially look at those bigger swings, where you may be seeing this potentially in the market, continuation, a push down, okay, and you're just looking at these major swings in the market. So the first mistake I'm seeing many of you doing is this type of market structure mapping. You're just looking at these larger swings. And when you do see these swings, yes, this first one, price does come back into this larger swing in this area on this pullback to breakout, that area. Do we come back to the smaller area of demand? No, we don't. Okay, so it's a missed trade. Now, again, if we use the full zone, pull that across, do we come back into here? Well, not until we run through the demand. So it's a losing trade. Again, you may be thinking this is correct. We can mark off a smaller zone even. Again, straight through, removing your stops. So again, you may be thinking this is a good setup, but you're still fading. Now, once we do see this breakdown, you could be looking at this full move as your full zone. We never come back to the area until here. Now, price, all it does is we start to push away and we flip back to the upside. Another losing trade. Even if you were looking at this smaller area up here as an area of supply, hey, price breaks straight through, still losing trade. And when you get to this last area, this buy here before we see the move lower, price does push away and does come back in, but then fails to continue lower and just shifts and reverses back bullish. And again, if you're using a smaller zone like up here, using a smaller area of supply, price just runs straight through. And when we see price shifting bullish here, again, if you're using this full area, we never come back to it. We never come back into this area of demand for any entry. And if you're using a refined area, we definitely never come back to it. So when you're marking the structures like this, these larger types of swings, not only are you going to miss potential trades, but you're going to end up getting into losing positions as well. Now, later we'll go through the way you should be marking up your smart money structures. The detail is in the actual strategy. But this is one way you may potentially be marking up your structures and you're not getting those trades. Now, it's worse emotionally when you miss those trades. So that's one thing you could be applying your structures completely wrong. The other thing is you may be looking at your structure in this way. Let me just go closer into this area of price. Let's say you see this push down from here, a break of structure to downside. Okay, fine. But then you see this high getting pushed through with that wick. And what you're now seeing is a potential break to the upside. So if you're using wick breaks, that is not what you want to be looking at. Again, we can then look at this. We mark these off with a circle. That is not a valid breakout. What you're looking for, a valid break of structure, I'm just going to show you this as an example, is this level here. And you want to see a valid break with a candlestick like this. You want to see a full body break. A body must break a break of structure to be valid with smart money structure. This is not a valid. All you're seeing here is a liquidity grab. It's taking and sweeping these highs to take some liquidity to run for the low. And that's why you see price running and breaking that structure once again with a nice solid bearish breakout candle. That's the type of break structure you want to see. So when you see this pullback, you shouldn't be looking for a buy. If you're looking for a buy from here, and say you're looking at this wick as an area of demand, you come in, you're taking a buy, price moves sideways, and you get stopped out again. Again, everything's looking good for you, but you're still fading. So this is not a valid break of structure, but this is. So if we carry on from that area, we now know this is a pullback continuation. Again, this low here, we pull back and we continue to push down. That's not a break of structure. So you may be looking at this again as a break of structure, but it's not. And that means if you're applying the break of structure with a wick, it's going to bring you into so many losing trades. Because if you use this high as the last point what broke bearish, again, let's say you're using this wick as an area of supply, it gets pushed straight through and it's another losing trade. But now you see a new break of structure with this wick. And that's where you can start to really get into the losing periods of just chasing the market, bullish, bearish, by seeing the breaks. Make sure you understand that you're just looking for a valid break of structure with the body candle close. And you want to be marking your structure levels in a way that makes sense to you, and also where you can understand smart money are looking for those areas where liquidity is going to sit. So let's wipe everything off this chart now, and I'll go through step by step the correct way you should be looking at marking up your market structure using the smart money technique that I teach within this channel. And we're going to start that from this low, in fact. We'll mark this across. Now, as soon as we see this is a valid break of structure on a daily, this becomes a valid break. Why? Because one, we see the full body candle close down. Once we see this candle closing down, most of you will probably mark off this high here as your current high in the market. And you'll be waiting now for price to do a break of structure here again, as you see with this big full body candle breaking out of this high before you start looking for any buys here. Now, this isn't the way you use smart money structure, because your valid high is not going to be here. Your valid high is going to be from where we see the breakout. We look back to last time we see a close up. So we go closer in to these candles. So after we see this candle breaking down, I'm going to mark it up with an arrow up. You can see the last time we see a close above is this candle here. Now we do close up with this candle, but we move sideways, and then this one closes up. After that candle closes up, we create this as a new high, and we fall to downside. That is the true high that you are going to mark, understanding this structure. Not this high, but this high. Now, if we just go back out again, you'll see if you're looking at this as an area of potential supply, let's say, and you drag this across, when price does come to your zone, it's going to run straight through and it's another losing trade. But if you're using this as your area, this would be your area of potential supply. And you can see price, whether you're using this full area here, price does come back in and it does run the low. Now, the low is not run for new break of structure because we know this now because it's not a candle closed through, it's just a wick. But what you now understand is also that our reversal point is not up here, but it's here. And you could still have caught a trade here to the downside running the week low. And that's why you want to be looking at using your smart money structure. And again, once we see this break to the upside, and we'll just bring this up here, this is a valid high with a new break of structure. And we'll mark that out. Once we see this, we now look back again for the last time we see a close down, because now we've gone from a bearish move to a bullish move. We want to see the last time we see it close down. Well, does this close down? No, it doesn't, because it has to close below the previous candle. And you can see we never closed down. So the last time we do it is right there. That means this becomes a valid low in the market. And our high, again, will be using the same process. We'll be looking for the close down. So I can now mark off a new high right here. Let's get rid of this area. This becomes our new break of structure. This becomes a valid high as soon as you see this candle closing down. And now we'll have a new area of demand that we can mark out right here, where you look for your entry. Now, whether it's using the daily or using a lower time frames, because now we know we've shifted bullish with structure to run that previous high. And you can see this trade now works out. So going from a losing trade, looking for that sell, to using the smart money structure correctly, goes into a winning trade, capturing that reversal trend from a bearish to a bullish trend at the right time. It's all about timing using your smart money structure. And then we do see this push through. That's a valid break of structure right here, because it's a break with a body candle close. Now, that's how you can start using this. And again, when we see the move back, okay, we go from this breakout, we look back. There's the last time we see the close down on that candle below the low of that. We can now mark this off as a new low in the market. And this would be an area we can mark off as an area of demand, or this full zone here. And again, we look for the close down, which is this candle here, and that becomes your valid high. Now, the market doesn't pull back into this zone even for a buy using smart money structure, but understanding where we have price in this market, we can also use this area of a imbalance zone where price does pull back into and continues to go bullish. That's understanding the candlesticks with smart money, not just understanding our smart money structure here. And from this point, we continue with that smart money structure. So from this high is now a new valid break to the upside. Why? Before we wrap up, if you're tired of second guessing trades or stuck wondering why structure still isn't working, this is your turning point. There's a proven path where smart money structure becomes second nature and consistent profits stop feeling random. That's what Danny found after nearly $300,000 in losses. He didn't just learn structure, he mastered it and rebuilt his confidence from the ground up. If you're ready for that kind of shift, your next step is simple. Click the link in the description to secure your priority pass and start mastering smart money structure today, because it's now a body candle close higher. And we look for the last time we closed down from this point is this candle. That means we can move this low to here for new valid low in the market. And this becomes a new valid high, and you can start to see how we track price as it continues to move. So going forward, remember, you're not looking for those wick breaks. You're looking for a body candle close break, and you want to be marking up the strategy of smart money structure like you've just seen me mark it up here. And what I suggest doing next is watching this video coming up, which will go through a 2 time frame approach to help you how to apply multiple time frames with the smart money structure.